ICAI Muscat Oman chapter. On behalf of ICAI Muscat Oman chapter, I myself, Sangeeta Suresh, current Vice Chair of the chapter, warmly welcome you all to this special seminar of Indian Union Budget 25-26 and the celebration of the proud achievement winning the Silver Award in Category 2 at the ICAI Best Overseas Chapter. ICAI has today 52 overseas chapters across 47 countries and 81 cities, and we are honored to be recognized one among them. Let us give ourselves a big round of applause for this milestone. Each one of you members have contributed, and your contribution counts towards this success. So each of you are important for this journey of the success. Also remember, success is not just about reaching the destination, but about enjoying the journey. So here today, this evening, we are going to celebrate all of these. As our Honorable Finance Minister had once said while presenting the Union Budget, budget is not merely numbers, it is the vision of nature's future. We are going to hear in detail about this Union Budget shortly from CA Aniket Talati ji. Thank you, sir, for being here today with us. We are deeply honored by the gracious presence of His Excellency Srinivas sir, whose support and encouragement means so much to us. Thank you, Your Excellency, for your valuable time and joining us for this evening. Before we start the event, let me appreciate and my heartfelt gratitude to all the supporters of ICAI Muscat Oman chapter in the form of corporate support, platinum support by OQGN, Deloitte, Moosiefen, Premier Grains, Crow and Jindal Steel as silver support, JSR Tax Advisors who are the tax support partner, Tech Deliver Cyber Security partner and technology partner by Tally. A big thank you for the bronze support by Abutima and GST. Heartfelt gratitude to the silver members, PwC, BDO and MHD, the former corporate members, and Al-Naba and Arabian Industries as regular member of the chapter. A big round of applause for all those who have supported the chapter so far. And the success of the chapter comes along with their support as well. As proud members of Institute of Chartered Accountants of India, we are united not just by our profession, but by our shared values, ethics, and commitment to excel. Our ICAI motto song beautifully reflects the spirit of integrity, trust, and nation building which defines us as chartered accountants. It is more than just a song. It is a reminder of who we are and what we stand for. May I request all of you to kindly rise and join me as we play the ICAI motto song. Let us sing it with pride and energy.
Yaesha supteshu jagrati, Yaesha supteshu jagrati, Kamam 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 pursho nirmimana Tadev shukram brahma Tadeva Tasmin lokaha Sarve taduna Sarve kashjana एतद्वैता 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 एतद्वैता.
And before we proceed, let us take a solemn moment to remember late Siddharth Bhaiya. Siddharth Bhaiya was highly respected Indian fund manager and managing director of Equitas Investment Consultancy. He was known for his sharp insight into the Indian equity markets. He delivered a powerful session in our first GCC international seminar, which was held in Oman in January 2025 on Indian capital markets. Sadly, he passed away at a very young age of 47 on 31 December 2025 due to cardiac arrest. This is indeed a great loss to the finance as well as professional community. May I request everyone to kindly stand up as we observe 1 minute silence in his memory. Thank you. As Siddharth Bhaiya often reminded us, knowledge shared is knowledge multiplied. So let us carry this spirit throughout, and as well as his vision and contribution, let it continue to inspire all of us. Thank you. Now, let us have some positive energy and enthusiasm in this hall. It follows what happened over the weekend. Here from the screen you can see that we had the first GCC cricket tournament, which was hosted for the first time in Bahrain. And it was taken part by all the 6 GCC countries, and they had their own team going down to Bahrain and playing the tournament. This weekend, 13th and 14th of February, was a milestone where we had the first GCC cricket. And they were the groups which was divided into 2 groups. Group 1 consisted of Bahrain, Doha and Oman. Group 2 by Dubai, Abu Dhabi and Kuwait. And these groups were taken out by lot by the cricketer Irfan Pathan during the Dubai International Seminar. And you can see that this event of the matches happened on 13th of February at Bahrain. And the next day, which was 14th of February, was held the semi-finals and the finals. From Oman, also we had a squad of team who went down all the way to Bahrain, representing ICAI Muscat chapter. And let us give a big round of applause to this team who had sincerely and dedicated put their efforts, did sincere practices all throughout the weekends and some as well as the weekdays since December. So it's not an easy task. They had put all their efforts to do the practices and go down to Bahrain and held the flag of ICAI Muscat chapter very high in Bahrain. We are proud of our team. Because you can see from the next slide, the table of points, Oman was leading on the first day after the matches which were held on the first day. So I would request if any of the cricket team members are here, kindly stand up so that we can give you a big round of applause for what you have shown in Bahrain by representing the chapter there. Well done. Well done. They had put all their efforts and did sincere tasks and put so much of effort, but then unfortunately they couldn't do with the semi-finals, and ultimately Bahrain became the champion of the first GCC cricket tournament. Now let's go through the upcoming events which are lined up. On 14th of March, we are going to celebrate the International Women's Day, followed by Iftar. In April, though the date is yet to be announced, we have CAs and startups. April or May would be the regulatory framework in Oman. And in May, we are going to have the AGM of the chapter. So here it is my privilege to invite the chapter chairperson, CA Unmesh Bhome, to deliver his welcome speech.
For Aniket sir, whenever I stand here to deliver the address, I raise my hand, and that's the grand cue for the audience to clap. Yeah, I'm happy to say that this brand has been made regional. Every conference I went in GCC, I ensured everybody clap when I raised my hand. Thank you, everybody. Your Excellency, Srinivas sir, past President Aniket sir, our founder chairman Davis sir, all our past chairpersons, members, welcome to this grand celebration. Today morning I just thought of few lines. I don't know if somebody has read my LinkedIn post. It's a repetition. अर्ज किया है अच्छा सफर में साथ हो तो रास्ते आसान लगते हैं सफर में साथ हो तो रास्ते आसान लगते हैं मंजिल से ज्यादा खूबसूरत कारवां लगता है. So this is to you all the members. What a wonderful occasion that you all are here to celebrate the success your chapter has achieved by winning the Silver Shield for the year 2025. So I think each one of us deserves a big round of applause. So let me just first go to the next slide. Oh, everybody knows this slide, right? But it's probably for the Aniket sir. This is the theme we had adopted, and this is the logo, and we are working on delivering knowledge to our members. Yeah, so since 2015, we have been consistently winning the Best Chapter Awards. Sometimes we were first, we were second, we were third. It's oscillating between whether it's the first or third prize, but we have been winning it consistently. And I can tell you, standing here, telling you that we got the second prize. It's a very hard work of all the committee members, all the subcommittee members, and also all the members, which is collated in a 70-80 pager document, which we submit to the institute on the due date, wherein we highlight all the achievements of the chapter, achievements of the individual members, the events we carried out, the CA brand which is promoted. Just for the benefit of Srinivas sir, Aniket sir's father, Sunil sir, he is the one who got the CA logo in 2007. And during his tenure, he updated the logo, and we have been branding that logo. We are proud to call ourselves as CA India. So the identity was missing, and we are happy, Aniket sir, you are here with us to celebrate our success for 2025. So as I was saying, the efforts which are put in by the committee and everybody, they are so tremendous. I think they deserve a big round of applause. Very big round of applause. There are so many criteria. Yes, sir. I was about to answer, because the reason why I put in this slide is to answer this question, because why we are not always the number one. Everybody wants to be number one. So the 70-page document I explained, that comes out with almost 7 or 8 categories of evaluation. Everywhere there are marks, point system is there. This year there are around 235 points if I am not wrong. Badriji can correct me if I am wrong. So we have to assess what all we have done. Correct. So let's give a big round of applause for all the past chairpersons who have delivered a consistent performance. We are missing Gaurav, right? Gaurav is not here. Okay. Because I was part of from 2021, 20, right? Prabhuji was there, then Sajeev, Jim, Gauravji and I. So it is a lot of efforts. I would say, I don't know. I don't know what to say. I want to tell that बहुत काम करते हैं लोग यार. So just you need to be with them. That is very good point because Sangeeta ji just mentioned now we got around almost 52 chapters. When the initial award started, probably there were less number of chapters. The competition is increasing every day with the use of like the technology. A lot of things are easily available. It's becoming challenge for the chapters to become innovative. And we have managed to do it with your support. So please keep on continuing to support the chapter. Yeah, that I was able to tell Aniket sir in private, but now you have made it public. So. No, we have our concerns, sir, in terms of the marking system comes out very late. So probably that can be just worked upon. So we get a fair opportunity to probably work on. Yeah. So that's all for the best chapter award. Sangeeta ji mentioned about the cricket tournament. So we had the first GCC seminar in Muscat last Jan. Then we had the second GCC seminar in Abu Dhabi in Jan 2026. And now we had the first GCC cricket tournament. In last, I think 4 to 5 years, the coordination between the Middle Eastern chapter, the GCC chapter has increased tremendous. And this is a result of having 2 international conferences followed by the cricket tournament. So I think we are, and those who have come for the, how many of you have come for the international conference? So how was your experience of the GCC ones, either Dubai, Abu Dhabi, Doha, Bahrain? So I think you guys need to spread the message how good these conferences are, good to network, good to expand your professional circle. So please join for the international conferences for all the GCC. And obviously WOFA, we always have fun and I enjoy these sessions over there. So for the cricket, I have written few lines with your permission. Should I? Yes. You don't have any option. So it's सात समंदर एक ही सागर कविता है. So on cricket, कभी न देखे कहीं न देखे, कभी न देखे कहीं न देखे, ऐसे चौके ऐसे छक्के, कभी न देखे कहीं न देखे, ऐसे run out ऐसे catches. We saw a lot of catches in the tournament which really won the matches. कभी न देखे कहीं न देखे, ऐसे wickets, ऐसे दाव, ऐसे pitch, ऐसे tricks. कभी न देखी कहीं न देखा, कभी न देखी ऐसी स्फूर्ति, कभी न देखा ऐसा फोकस, कभी न देखी सख्त इरादे और नजरें तेज. BNW के GCC के इस पहले क्रिकेट टूर्नामेंट में हमने सच में देखे खेल के हर रंग, दोस्ती के संग. और आखिर में एक ही कहना है, हर खिलाड़ी सिर्फ खिलाड़ी नहीं था, हर खिलाड़ी मेरे भारत का, मेरे GCC का CA था. So big round of applause for all the members, all those CA members who came and showcased their skills. So moving on to the current topic, why we are here for the Indian Union budget, and we have got a fantastic speaker, none other than CA Aniket Talati sir. We are always eager to hear you out. And don't worry, I'm not going to talk anything about the budget here. I'm not the subject expert. But I would just say, there is a saying, Chanakya says, Athasya moolam rajyam, rajasya moolam indriya jayaha. So that is the root of wealth is governance, and the root of governance, I think something wrong with it, is sound economic choice. So budget, I think from Jan 2025, India has entered into a very golden era. Last year onwards, we have started entering into milestone agreements. If I list those down, I'm getting old now. We had UK SETA, then we have got this last month we had US FTA, then we obviously had Oman FTA in December, which is now ratified by Oman. I think we are awaiting it from approval from India side. Then you also had with European Union after the Republic Day, and this is the right time for us to understand how the budget is going to help us and what is there in for us as chartered accountants. I always say, I read it somewhere, as chartered accountants, we do not merely interpret budgets, we translate them into business reality. So we are the ones who channelize, guide our clients, guide our friends on how to get the maximum benefit out of the budget, what are the provisions. So we are the ones who run it. So with this, I will not take much of your time and pass on the proceedings to our MC. But before I go, sir, there is always Sunil sir had mentioned that in the last GCC conference. East or West, Indian CAs are? Yes. आवाज ही नहीं यार, क्या लगेगा उनको? East or West, Indian CAs are? Yes. और एक बार, East or West, Indian CAs are? Yes. Thank you very much.
Thank you, Meshi, for the inspiring words and the update. As someone says, that leadership is not about the titles. It is about the impact which is created. And I'm sure you all would agree with me that the impact is created by a young and energetic chairperson of ICAI Muscat Oman chapter. Let us give him a big round of applause for the impact that he has created for the chapter. Ladies and gentlemen, as we discuss Union Budget 2025-26, it is important to hear the perspective from someone who has shaped the profession at the highest level. We are honored to have among us CA Aniket Talati, who is a past president of ICAI, whose leadership has guided members worldwide navigating the policy and changes and the global challenges. May I request CA Ashish Subedar, Treasurer of ICAI Muscat Oman chapter, to kindly escort Aniket ji onto the dais and welcome him with GIY kit as we hear his introduction over the AY.
Meet CA Aniket Talati.
Thank you very much and very good evening, ladies and gentlemen. I get a little embarrassed when there are introductions happening. In fact, whenever I was vice president and president of the institute, one thing I used to make sure is whichever chapter, branch or region I visited, I would say that please no introductions. Firstly, it saves time. And second, you become the institute of the president and you still need an introduction. I mean, what have you done in life? So I think it's better we don't do this, but I think thank you to the chapter. So one of the rare times I got to hear about myself, but what a pleasure to be in your midst this evening. And in the allotted time that I've been given, I'll try and dwell into certain important aspects of the budget that has been presented on 1st of February. But before that, my special thanks to Unmesh ji and the entire team for inviting me. I think you're doing a wonderful job. Your role and the leadership that you and other chairpersons have provided is clearly visible in the fact that you have these trophies just besides me and in front of me, which are a testament of the hard work that the chapter has done. Believe me, friends, first, second, third, I think end of the day it's just a number, and it's the institute and the head office recognizing the efforts that the chapter has put in. And to the question, sir, that you had, it has now got even more competitive as we move. Every year, we are opening 4 or 5 new chapters, and the categories remain same, and therefore, I think the competition keeps intensifying, and of course, the marks keep increasing, and the activities that are expected also keep increasing. So, given that phenomenal job that the chapter has done, I think one point that I would like to make here, though it was mentioned by the chairperson earlier, this chapter, Oman and Muscat, is very close to my heart. In fact, I recollect my father was about to lay down office on 5th of February 2008 as the president of ICAI. And end of January, Davis sir is here. I was told that he was suddenly going to Oman. I said, boss, you have your last council, so many things. Why are you going? He said, no, we've received the approval for setting up this chapter. And he came here, and since then Davis sir has been like family. So sir, always a pleasure to be here, and all the chairpersons that I've worked with, I see so many of them here. It's always been a wonderful opportunity for me to be in this wonderful country and this great city of Muscat. So thank you for giving me this opportunity. His Excellency, Mr. Srinivas, sir, honor to be in your presence, and I think as soon as you came in, the energy that you've spread and the smiles that I could see in the face of our managing committee members and the ExCom members and the office bearers. I have traveled to many chapters, but I think this strongly represents the person-to-person connect you have been able to establish, not just with our chapter. So yeah, big round of applause. Sir, one is honestly been to so many chapters, and I think the warmth that they all have for you, I'm sure, especially today when I was just coming in, I saw on the Times of India app that the official decree for the treated agreement, CPA, as you call it, has been signed. I'm sure the other aspects of this, His Excellency will explain and maybe tell us how it gets implemented, but truly a historic day to be in your midst. I think one important point that I would like to, sir, maybe just take a couple of minutes to explain is about the Institute's motto song that was played. And sir asked, and many of you may not know what is the relevance or the importance of that motto song, but a very important piece in our history. Because for the young members who may not know, the Institute was incorporated on 1st of July 1949, before the Constitution got adopted on 26 January. And our first council meeting happened on 15th of August. So 15th of August is when the first council happened. I believe we'll have the 550th meeting anytime next week. So that's how long the Institute's history has been, more than 75 years. But in the first council, the discussion happened, sir, that what should be the motto, what should be the emblem that represents the chartered accountancy profession. And one Mr. Shastri, who was a central council member, was tasked. He was a great follower of Mr. Aurobindo. And therefore, he went down south. Of course, a lot of knowledge resides in the south. Our finance minister also comes from the south, who has presented his budget. And as always, we got great wisdom from Mr. Aurobindo. And the idea was that what should represent the chartered accountants. And therefore, we have the emblem of the institute, the Garuda, the eagle, which is there, because his view was that your role is that of an eagle. You have to soar high. As an eagle is able to spot from a distance, that is going to be your role. And more importantly, when there is rain, when there is thunder and so much of disruption happening, all the birds seek shelter. They'll go under trees, they'll go to some place. Eagle is a bird which soars through the clouds, up in the sky. I think that is the quality that is required for chartered accountants. Therefore, Garuda the emblem. And what a wonderful shloka. Yayesh sukteshu jagrati. The one who is awake when others are asleep. That's the meaning, sir, of the institute's emblem. We are expected to be guardians. The investors, stakeholders, government, etc. may be sleeping or may not be looking actively at something. But as chartered accountants, we are expected to look at that. Coincidentally, that has also been my journey. I have taken a midnight flight and come here, so I have remained awake entire night and was awake when all of you were asleep. So I have truly tried to live up to the emblem also, and there is no fault of the chapter. When I said yes, that I would love to come, I recollected that there used to be a flight from Ahmedabad, sometimes via Mumbai, coming here, and I said I'll reach in decent time. The last time I came here, I landed in midnight. Little did I know that I would have to go through Abu Dhabi, come here, and then land only at 10 in the morning. But I think seeing the wonderful people in this hall, it's all going to be worth it. So thank you for giving me the opportunity, and I will touch upon the union budget analysis. But one also important small point, I'm glad that you stood up for Siddharth Bhaiya, who's a very, very polished chartered accountant. I have had the privilege to share the days with him a couple of times. You may not know, but there's a very beautiful term he coined a couple of years ago when we were on a conference. Back in the day, if in the IT sector, something was sent to India, the Americans said your job has been Bangalore, meaning to say that your role which was being done in India or in the US is now going to be done in India from Bangalore. And now in the era of financial services, funds, he said, we have had the years of the Singapore MAS or the other regulators in Mauritius and other parts of the world, but now is the time for gift, and therefore for the fund ecosystem, he said it's time to be gifted instead of being Bangalore. He in fact moved all his funds from Singapore to GIFT, and I think he was somebody who has been a very, very important player in the ecosystem of introducing international capital markets for India, and also spreading across the importance of value-based investing. In fact, last September, when the markets were in an all-time high, I recollect discussing with him very specifically, and he says, I have moved 90% of my value in cash. And I was very surprised. That was just before your international conference. And he says, no, I don't see value in the market, and I think it's been 1.5 years since, and our money hasn't grown. Thankfully, today the market has been a little positive, but he was able to see that there is deep correction that is coming in the market. So, yes, we lost him. Two other gentlemen that we lost, and I think we must all also remember them. One, I believe, would have come here definitely in his years as a past president, Mr. T.N. Manoharan, another important person who we lost, our past president. And very recently, just on the first day of WOFA, another past president, Mr. Jaideep Shah, who hailed from Nagpur, also left us. So yeah, very happy to see that as we celebrate, you're also remembering important people in the profession who have contributed in shaping our lives. So with this, I think I begin my analysis into the direct tax proposals. I will call them proposals because they are still not the act. One thing that has certainly changed in this new government, earlier, all the years that we used to have the budget, many of you will recollect it used to be on 28th of February. So the entire exercise at the Union would be on 28th of February when the budget was presented. We used to have the Excise Act, so from 1st of March, those changes would typically get implemented, but the budget session would continue in March. Then there would be a break, it would then be approved, and probably by the time it was signed by the President, it was already May. So imagine we were trying to be a country which was, hoping to be a developed country, looking to be in the developing world, but yet our budget system itself ran a few months behind. I think compliments to this government for bringing it forward to 1st of February, and now the entire process, in fact, culminates before 31st of March, and effectively, therefore, what happens is that as of 1st of April, we have the new budget, and all the ministries can start working immediately. So, very small nuance changes, but important from the perspective of what has happened. Today, what I'll try and deal with, as I have the next probably hour with you, in terms of the budget, I will not only delve into the direct tax and indirect tax proposals. We'll also go for 5 or 7 minutes a little macro, because important for you to understand what is the India story, why people are discussing it, maybe some numbers that can probably open some eyes and make you dwell and think that what is it that is causing so much attraction in the global world. Yes, you hear headlines, we were in the fragile file, we are now moving in the top 3 economies of the world. Yes, these are all good statements for us to hear and be extremely proud to be Indians. But why is it that that is happening? So maybe certain fiscal headline numbers of why the world is looking at India the way it is. The direct tax proposals, of course. I will also touch upon, more than the direct tax proposals in the budget, some important changes that have been made from the NRI perspective, because as I understand, most of you in the room will enjoy NRI status as far as the Income Tax Act is concerned, and therefore what are these changes that impact you? I have brought in a couple of slides for the GIFT City and IFSC, because I believe it's very relevant for a lot of you who are now totally outside India in terms of not just your residential status in the Income Tax Act, but for FEMA purposes and even long-term thought process of settling outside India. And therefore, why GIFT, or what GIFT offers, and what are the specific changes with regards to IFSC, because it wasn't mentioned by the Honorable Finance Minister in her budget speech, but if you go through the fine print, some very important policy changes that have come through, I think, which will impact the entire GIFT City ecosystem and may also have certain important areas for you to function. And finally, of course, we'll talk about certain action items. So I think as we go forward, very, very important numbers that we must look at. 53.47 trillion is the size of the budget in terms of total expenditure. 53 lakh crore. I sometimes wonder if the rate of growth of taxes, which has been close to 20% on an annual basis for the last 4 years, may not sustain the same, but even if we assume 10 to 15% growth rate, maybe the next 5-7 years, we will hit and cross 99 lakh crore. And how do we call that number? I don't know. 1 crore, mujhe bolna nahi aata hai. But imagine the size of the budget that is going to be. I think we all recollect when the budget used to be given years ago, and somebody mentioned 70,000 crore defense budget, and you would all think, wow, that's such a huge number. And today it's 6, 7, 10 times that number in terms of just the budget allocation for defense. That is the kind of growth of the Indian budget that has happened. What are the receipts? Excluding borrowing, 36 lakh crores. But a very important number is the fiscal deficit. We've managed to tap it and cap it at 4.3% of the GDP. This typically means that we are not overspending. There is great financial discipline that has been brought in. And mind well, post-COVID, the number almost hit double digit. We were 9.4% in terms of our fiscal deficit. What this means is that the country has not only come back after the COVID impact that we had in terms of slowing trade and commerce and business, but it has also ensured that there is sufficient growth of receipts. That is through our direct tax collections, both income tax of person and corporate income tax, and the GST collections, which have been phenomenal. Just before the budget, I think this is something which is also very unique that has happened in the Indian ecosystem. For years, our entire financial changes used to always happen on February 28th or 1st. I'm leaving the date aside, but they were always focused on the budget day. Now, the government is not reactive but proactive, and therefore what we saw is certain GST changes that were implemented in November just before the eve of Diwali. And what that has triggered again is a phenomenal growth in GST collections. We have merged certain slabs. The 12% GST rate no longer exists. If you go back to India, probably when you went last time, you had certain items which were 12% and 18%. That 12% slab has been done away with. Lot of products have been brought to 5, and some have also been brought to 0 rated. And what this has done, the fear was that there will be a loss of revenue, but there has been a tremendous increase in volume growth. You look at FMCG, you look at motor car vehicle sales, they are through the roof. And I think these are just small examples of how fiscal policy is no longer restricted to the budget date, but is now happening throughout the year. GST being one example. The other example which I recollect, and I think this is probably very rare, I come from a family where my grandfather became a chartered accountant in 1950, my father sometime in 75, and then later myself. So I was discussing and trying to understand when the Finance Act was amended during COVID in the middle of the year, and a new rate of tax was introduced, a lower corporate tax rate. I believe this was unprecedented in the history of India, where in the middle of the year, just to respond to a crisis, the government came forward, reduced the corporate rate for new companies that were incorporated. So I think, yes, very important fiscal moves, and I think for all of us to understand that the growth that is going to be expected is 10% nominal growth, and our borrowings are somewhere close to 16 lakh crore. So very important numbers. And also what is important is government is now no longer tracking the fiscal policy and the fiscal deficit only as a percentage, but it's also tracking it as a percentage of GDP. And if you heard the finance minister, she mentioned that the idea is to bring it close to 50%. And I think once we do that, we probably will, in terms of the country's balance sheet, be as good as it gets in most parts of the developed world. And imagine, as a financial statement, I think we are all chartered accountants. Some of you may be in practice, auditors, consultants. Some of you may be in companies. And we all know that a good financial statement is what enables us to draw foreign investment and, of course, borrowings. So therefore, very important changes that have been brought in. What this also means is that where is this money going? And some very important statistics. I was recently invited just after the budget to speak to certain startups of Gujarat, and we had a session there where I spoke to them about what are the changes that startups will face. And as we speak, there's an AI summit which is happening in India, in Bharat Mandapam. But look at the infrastructure and capital spend. I think a huge shift has happened in the last 10, 12 years in terms of the focus of the government of where we want to spend. Earlier, of course, huge amount was spent on subsidies. We still spend the amount on subsidies, but today you all have a chat GPT on your phone. Just go and look at the number that was spent, let's say on a fertilizer subsidy, on other schemes that was spent. And even if you look at a 12-year period, the increase in percentage is there, but it's not so huge. But what is very important is all the additional money that has been collected by the union government is largely going into capital expenditure. And the budget estimates this year show capital expenditure at 12.2 lakh crore. Now compare that with the 2014 budget. it was just 2.26 lakh crore. 6 times almost the amount that we are spending on capital expenditure. Roads, highways, airports, ports, ships, and now new areas of industries which we were never into are now being encouraged by the government. How this is happening is that infrastructure is being made at breakneck speed. I don't know how many of you have got the opportunity to visit, but those who were in Gofa, you could have seen that Yamuna Expressway. Now you go to the Ganga Expressway, come to Gujarat, you will see the entire expressway from Baroda to Delhi, and then going south to Mumbai. We now have a totally new expressway. We have a totally new dedicated freight corridor. And what that means is that India, which used to have its transport cost and logistic costs at 14% of GDP, has come down to 7%. This is an international benchmark number, and very important. Only if goods and services are able to seamlessly flow and flow with predictable speed. Now with e-way bill, you no longer have those octroi nakas. You no longer have to worry about the truck not crossing the border safely, and the traffic snarls which used to take you sometimes week from goods to deliver from a port in Mumbai to somewhere in the north. Today it happens in a matter of days. So yes, huge impact has been given on the capital expenditure. Also a very important area which many of you may not be aware, but especially for those who are into consulting and have clients who are looking to invest in India, some very important schemes that the union government has come up with, and one of them is the PLI scheme. You've all seen that lion, right? That Babbar Sher and that lion with all the mechanics in it. And many of us think Make in India matlab wo logo. See, logos don't make a scheme. You mentioned, Chairman, about the CA India logo. Of course, we had the old logo with the green tick, which was the auditor's tick. But when we were in the council, and it was my pleasure and privilege that as president I got to launch this with the hands of the Vice President of India and Piyush Goyal ji. We were thinking what should be the new recognition of the Indian Chartered Accountant. Yes, the green tick we all understand, especially the seniors who've done audits and would have gone and ticked off vouchers with that green pen and used this reverse tick to verify numbers. But we wanted the logo to signify something beyond that. And therefore, when we thought about it, somebody brilliantly from one of the agencies in Kerala came up with this idea for us that why don't you do the tricolor? We simply added the saffron color there, and now the logo signifies the tricolor, and more importantly, when you go forward and meet somebody from UK and he says, "Hi, I'm Alex, I'm CPA from Australia," or you meet somebody who's John and he says, "Hi, I'm John, I'm CPA Ireland," you too can, friends, proudly say that, "Hi, I'm Ashwini, I'm CA India." And the idea is that we give a brand to our profession, because today we are 5 lakh chartered accountants pursuing the course. We have our international chapters like yourself who are keeping the flag of the profession growing very, very high. And I personally believe that as it has happened in the IT sector, you look at a Microsoft, Mr. Nadella, if you look at Google, you look at Mr. Pichai, I think because the IT sector moved outwards in 90s. Similarly for our profession, yes, some seniors may have come here earlier, but a lot of our accountants have begun the migration journey in the last decade. And I have no doubt in my mind that next 5-10 years from now, as we today very proudly say that who is the CFO of Tesla? He's none other, sir, and you'll be proud. The largest company in the world and the highest paying CFO is none other than a chartered accountant from the Institute of Chartered Accountants of India. That's the kind of recognition our profession today has. And going forward, I am sure that globally, the largest CFOs, the largest companies will also be Indian Chartered Accountants. And so to recognize this brand is what we did with the launch of the CA India logo. Similarly, the Make in India is not just a logo, is not just a lion. There is very important schemes that run behind the Make in India. And one such very important scheme are the PLI schemes, the Production Linked Incentive Schemes. There are 12 sectors that were initially recognized. Today in the budget, 47,000 crores has been earmarked for electronic component manufacturing, ECMS. So no longer are your iPhones just made in China, but so many of them have now started being manufactured in India. And now with the ECMS scheme, it's not just the phone, but components of the phone. So if you look at the new iPhone, it has an aluminum at the back. There are factories which are being set up in India to make that aluminum. The glass that goes in, the pieces of electronics that are used inside the phone, if you are manufacturing them and you are setting up a plan to do that, based on the sales that you are able to achieve, the government is incentivizing and giving you capital expenditure reimbursement in the form of PLI. So very important schemes that are running, and of course the infrastructure risk guarantee fund, which is going to crowd private capital, and the entire monetization or remonetization of our assets. There was a national monetization pipeline that was announced 5 years ago. I'm sure the new one will come in the next budget. But a lot of monetization of the Indian assets is happening through this. So I think to summarize the part A of the budget, because all of us usually only focus on the part B, but I believe the part A is where the real meat and substance also lies. We have a very strong fiscal glide path of going from 4.5 to 4.3 and then beyond in terms of our fiscal deficit. There's a very clear focus that we want to become a manufacturing country. Come to Gujarat and you will see, for example, so many semiconductor plants that are being set up. And it's not just in Gujarat, they're in so many parts of the country. I speak of Gujarat because every time I go west of Ahmedabad, I hear of a new semicon company from Korea, from other parts of the world, from Japan coming and setting up shop. And this is real hardcore manufacturing chips and other components. So very important manufacturing push that has been given. Trust-based compliance, I will go towards that. And of course, market behavior is being tracked. The budget is no longer just for the perspective of making sure that there is revenue, but there are changes that are made to ensure that if there is something happening in the market in terms of speculation, how do we curb that? I'll come to that. So what is the big picture then of the direct tax? One very important aspect, and I think for any one of you in the room who is considering to practice in India in income tax, you now have a very great opportunity. So far, all of us who were predominantly in India, and I'm not just a tax partner in my firm, my father leads the practice, I look at only certain part of the income tax, but I think even today, if I was to quote sections, I can do that from the back of my mind. If somebody was to ask me, a TDS rate, I'll quote you not just the section, subsection, the rate, because they're all ingrained in my mind. And I'm sure it'll be for many of you who have practiced for so many years. But now what will change is the entire act is getting replaced. We were all not sure what will happen, but there came the finance minister on the floor of parliament and very unequivocally said that 1st of April 26 is when the new act gets implemented. So now all the sections that we know of will have to be relearned, unlearned. And very importantly, next year is going to be a unique year because it is the last assessment year. Correct? This is the previous year. It is going to be the last assessment year under the Income Tax Act 1961. And it is going to be the first tax year under the new Income Tax Act. So the new Income Tax Act has two very important concepts. The assessment year and previous year concept has been done away with. What there is now is the financial year and the tax year. So now this new budget, which was presented on 1st of February, is truly unique because if you look at the budget proposal, it's one bill, but there are two acts that are getting simultaneously amended. You will have to amend the 1961 Act because this act is also going to be the assessment year act applicable for all those transactions that we do from 1st of April 25 to 31st of March 26. So this is going to be applicable, and therefore probably for those who like to store, keep something in the library, this is the act that you should store because this is going to be the last version of the 1961 Act that we've all so fondly been used to. And what will start is the new Income Tax Act 2025. Legislated, signed, approved, and now very recently, I don't know how many of you got the opportunity to see it, but the forms and the rules have also been notified. All the forms that we used to do so far are changing. New forms have been notified. Of course, they will have to be put on the income tax website and new XML will have to be generated and of course a schema will come out. But what is happening is that all forms are changing. So what has happened is from what used to be the old Act, 281 sections, of course we call it 281 sections, but if you look at the subsections, explanations, it's probably 800 different sections that are there in the Income Tax Act today. And if you look at the number of wordings, and I did this just to understand, when the government is saying that we have made the act simpler and easier to understand, if you do a simple word count, the old act is some 5,50,000 words. The new act, of course, it's not less, but it's still 3,20,000 words. So we've done a decent job of reducing the number of sections and the words. But what will be a challenge, I personally feel is, though the government's intent may be that I don't need a situation that Section 80, which was the deduction section in 1961, went on to have today so many subsections, and not just capital A, capital B. Look at, the seniors will remember HHA, HHB, HHC. These are all now omitted from the Act. So somebody who may want to read the Act and may read the entire HHC, at the bottom will say this section has been repealed with effect from so and so, but it's still there as a part of the Act. Any which ways, what happens is, all these capital letters which crept into the Act because of every subsequent amendment, the original idea of the new Act was to make it simple. But I think this is the first budget which is already introduced substantive changes in the new Act, which is already passed, and we already have a couple of new capital A sections. So let's see, maybe 10 years from now, this Act also will see, similar to our current Act, various changes, because end of the day, the government will make and legislate the Income Tax Act. And I think brains like ours will try and find loopholes in terms of how do we legislate, how do we litigate this and work out benefits for clients, and of course do the right interpretation, and then the government will go forward, probably retrospectively or prospectively amending the Act and inserting certain subsections. But yes, I think all in all, very important that the new Act, we all have to understand, along with this budget, is getting amended. Some very important changes that have been brought in, I don't think these are discussed enough, but for those who are in the ITES space, I think this one change, and I'll probably take you through it in a little detail, is the safe harbor provisions. And I think what the government has done truly is, for all those of you who are from Bangalore, Hyderabad, or have some connection in that part of the country, believe me, the large tax offices of some of the largest firms will have an existential crisis in certain aspects, at least as far as transfer pricing is concerned. That is the kind of impact that these safe harbor laws are going to place for ITFDs. And I'll take you through them as we go forward. Yes, certain other changes in terms of compliance mechanisms for TDS, TCS, and dispute resolution has been simplified, and huge change has been made in terms of prosecution, where rigorous imprisonment has been changed to simple imprisonment, and that too with the power to courts to remove it. So, lot of trust that has been put forward on the taxpayers and the assessees. You will see what will change. But when I go back to the Income Tax Act, what is going to be truly challenging, as I foresee, is for many of us today, even if somebody wakes up from our middle of the night and tells us what is the rate for professional, 194J, 194C, these are all sections that have been ingrained in our mind. Now we have only two new sections in the new Income Tax Act. 392, which deals with the TDS for salary, similar to 192 that we have currently, and 393, where all other TDSs have been combined. The withholding tax of all A, B, C, D, H, J, whatever alphabets that we can think of, they have all now been subsumed in this 393. And what is worrying is that there is no capital A, capital B. There is a table which has been put below 393, which says 393.1, and then below that, there is serial number. So it's going to be a huge challenge for those who are practicing in India and filling up those TDS returns. Today, it's very easy for us to know the section and then put the TDS amount for the expenditure every month. Now you no longer have a separate section for each charge or expense, but you have a separate table number reference and a serial number reference. So imagine it is going to be 393.1 Roman 2 or Roman 4, and that is going to be the corresponding rate of tax and the section that will be used for TDS reduction. But I think that is what it is. One also very important change that the budget has done, and I think though the governments in the past have been very vocal in saying we will not retrospectively amend the Income Tax Act, there are 4 retrospective amendments that are very clear on the face of the bill which have now been brought in. These are, 2 of them have been decided and 2 are currently being litigated at the Supreme Court, but I think now it's a fait accompli in terms of what is going to happen to all of these matters. One is with regards to the FAO and JAO controversy. I don't know how many of you are well aware of this, but since 2021, what has been introduced in India is faceless assessment. Correct? So what that entails is that any order which has to be issued under 148 or 148A or any other order was always supposed to be done through the faceless assessing officer. So FAO is as we call it in our terminology there. But all the 148 and 148A notices, if you have clients, relatives in India, and they have received some of this, it may be for political donations, it may be for other reasons, they have all been issued by JAO, which is the Jurisdictional Assessing Officer, the jurisdiction in which the PAN resides. Lot of court cases were fought. In fact, in Mumbai, the Hexaware order is very clear. They said it cannot be. It has to be issued because the new act is very clear, saying it should only be issued by now the FAO, which is the Faceless Assessing Officer. JAO has been removed. But in this new act, beautifully, a non-abstain clause has been introduced, very clearly stating whatever is the judgment interpretation of courts, this can be issued by the Jurisdictional Assessing Officer. So, similarly, there were litigations going on. How many of you are aware of UDIN? UDIN, yeah? When you sign or certify, institute requires you to put UDIN. This was something that we created. I was proud as a member of the council that we brought it and made it compulsory in 2019. Very successfully implemented. Other professional institutes also implemented. Sir, what that says is you have to have a 16-digit number below every certificate that you issue. Because what we were seeing is many a times when criminal cases were fought, people would say that you have certified this, the signature was never mine. Somebody would just forge my signature, print a stamp and certify something to be true using my name and membership number, whereas I have never known the client, never received any fees for it. So what we did is we said we'll put a 16-digit number so that you can now trace and know who has issued this certificate. So today, any certificate issued in the country, maybe to a bank, to a client, to the income tax, there is a UDIN number where the bank or the government can verify whether this chartered accountant has issued this. Similar, I think, concept, which was the first in the world which India introduced, has now been taken not just globally but other professional institutes. And even the government implemented this calling DIN. So they don't call it unique, they just call it document identification number. And the Income Tax Act was amended, the GST Act was amended. In fact, the finance minister very famously quoted that if you receive a notice and it doesn't have a DIN at the bottom, tear it and throw it in the dustbin. Because we don't want to have notices which are issued outside the system. Many orders were done. Maybe officers were not aware that this has become a compulsory requirement. And then, of course, chartered accountants, advocates and litigants took it to the courts. There is no DIN in this order. Is it valid? And courts ruled in the favor of the assessee, saying if there is no DIN and the act specifically requires that every order should have a DIN, this order is treated invalid. And they were quashed. Now in the new budget, again, it has been very clearly said, DIN ho ya na ho, order hai to sahi hai. Again, certain changes, amendments, though one would wish don't happen, but sometimes to challenge the, I think, ingenuity of the human mind, especially of the Indian mind, when we are able to bring up such wonderful issues to litigate, the government also has no option. But now it is very clear, if it has a DIN or it doesn't have a DIN, those orders are valid. So, very important. What has changed? I'll take you through some more changes. But what has not changed largely are, of course, the personal income tax slabs. Those remain. I don't know why the whole screen is not appearing here. But the corporate base tax rate remains the same. And the surcharge and cess have largely remained the same. Very important statistics that many of you should know. Today, under the individual tax, there is a new regime, correct? So when you file your return of income, if you're non-residents, you may not be filing it, but for residents who are filing, who have income taxable in India, now what is happening is that more than 80% of the returns that are getting filed in the new regime. That is without deductions. Earlier we used to have deductions for healthcare, for life insurance, for investments. Some of us are very kind and also made political donations and got deductions out of it because there are political parties who we did not hear of yet. Many made donations to them and got those deductions. I'll not wander into that, but those were all issues that the government was seeing people are using. And therefore what they said is they made this new tax regime. The new tax regime today is in place, and now for the individual returns, overwhelming majority are now in the new regime. Similarly, in the companies, the reduced rate of 24%, the new regime, without taking any deductions, has become applicable, and many companies have started using it. Therefore, the amendment in the MAT provisions, which I'll take you through, has come. But The reason why there is no overhaul and a totally new regime so far is because partnerships and LLPs don't have a new regime. Individuals have a new regime, we all know, without deductions. Companies also have a new regime, but for partnerships and LLPs, I think they are still wondering what to do. As majority of you will be aware, India has a unique tax structure. Globally, partnerships are pass-throughs. If you are in the US or other parts, you issue a K1 and then the partner pays tax on the corresponding income. But in India, what was changed in the 70s and has remained so far is that once the partnership firm pays tax, the share of profit that I get from the partnership firm or LLP is exempt. And therefore, today, if you look at the data from the Ministry of Corporate Affairs, there may be 15 lakh companies, but the number of new LLPs that are getting incorporated is far larger. And I think one of the major reasons for this is the ease of tax, that if I am doing a construction activity, I am doing a business, let the business pay 30% tax, and after that, the income comes in my capital account, and therefore it is beneficial to me. If I was doing it in private limited, yes, the incidence of tax was lower at the corporate level, 24%, but then I had to pay dividend distribution, not distribution tax, but tax on the dividend in the hands of the shareholders. And therefore, it was turning out to be more expensive. So many people have now moved towards LLPs and are not incorporated companies. Be that as it may, now we have a new regime for individuals and for companies, but we still don't have a new regime for partnership and LLPs. But very clear that the government's focus is to move towards a regime which is without deductions, so that they also have lesser verification. This year, the returns took longer to process. Last year, maybe coincidentally because it was also the election year, I have cases where we file the return and in matter of minutes, I would get the return process and a matter of days refund was issued. This year, of course, it has not been the case as one would like, but I think last couple of weeks when I was leaving, we've started receiving a lot of refunds, and that too, the entire returns are being processed online. So when you don't have those deductions, the tax officer also doesn't have that much of verification due, and therefore the assessments are now auto-assessed. Also, one important fact is that scrutinies have gone down. Today, less than 2% of the returns that are filed get scrutinized. I think that's a very huge number. 98% effectively are a straight-through process where you file and the department accepts it. Therefore, they want a regime with lesser deductions so that they have lesser verification work to do. There's more reliance on you and benefit is passed on to you. One such example is the 12 lakh exemption. You are all aware last year the change was brought in. Up to 12 lakh, there is no income tax. I think a huge number. Nothing compared to the exemption you are going to enjoy 2 years from now. I think I was talking in the morning and came to know that that is going to be some 1.2 crores, if I'm not mistaken, in terms of the individual tax that may come in Oman. But 12 lakhs from the India context is still large. And imagine, Girish Ahuja sir very lightly used to mention that in India we may not have as many beauties, but we have many more beauty parlors because 20 lakh ka turnover, 12 lakh ka returner income. आज सब लोग का रिटर्न 12-12 लाख का हो गया है, कोई रिडक्शन होता नहीं है, but 12 lakhs return is filed, no tax is paid. And therefore, the growth in the formal economy has increased. What that means, friends, is that 12 lakhs tak there is no income tax if you are following the new regime. That has also pushed many of the assessees towards the new income tax regime. So yes, policy stability, and these are things that have not changed. The income tax return, 139.1, very important for all of us because we have known these dates for a lot of time. We know the due dates are covered under the explanation to 139.1. What are the due dates currently for tax filing in India? July, September and November for transfer pricing returns, correct? So now, because many of our members have been very active and aggressive on Twitter also, and you have seen it as soon as July gets, at least my Twitter handle is tagged multiple times, and by the time it's September, many times full of abuses also, as if the dates are with me and I can go and change them. But as the case is, the government has been receiving a lot of feedback that these dates are too close to each other and packed and stacked up against one another. So what they have done now, under this new act and also in the Income Tax Act 61, which will be applicable from 1st of April, is there are 4 different deadlines. 31st July remains. July also used to be the deadline for businesses who are not auditable. So you do not have an audit because your turnover doesn't cross the threshold, or your percentage of income is below that level and therefore audit is required. So if you have a business where you are writing accounts but audit is not required, or you are going into the presumptive scheme, for those assessees, there is a new deadline of 31st of August. Meaning thereby, if you have basic salary income, form 1, 2, which are very easy, simple returns, they also get released by the government very early. Sometime in April, May, they release them because those are only one-pager returns. Those continue to be due date as 31st of July. But other businesses, though not subject to audit, lot of times the AIS and the 26 AIS takes time to get populated. People used to say that by June only I get the revised AIS. It's available on the portal very late in the year. And then I have only 1 month to file all these returns. So to simplify that, what has been done is a new date has been proposed to be introduced in this budget, which will now mean that 31st of July, 31st of August, 30th of September for audited returns, and September ke baad, October is the returns of the audited returns. So that due date is always there. So you have July, August, September, October for the due date of returns, and then November for transfer pricing. So now every month you have a deadline. You know, we were complaining that August khali ja raha hai, log vacation le pa rahe hain. So Finance Ministry has said, don't worry, we will give you a very nice deadline also for August. So all months starting from July, we have a deadline for tax filing of returns and for, of course, the audits. Also some small change, technical but important for you to understand, in the section 92 CA, they used to give the opportunity for you to revise the returns 60 days prior to the due date. Now challenge was, how do you calculate 60 days? Imagine 31st March is the due date. Challenge becomes leap year. Agar leap year nahi hai, so 31 days of March, 28 days of February, and then you have to take 1 day from January, and the due date was 30th of Jan. But if it's a leap year, then 31 days of this March, 29 days of February, and due date was 31st of January. So two possibilities. Similarly, for 31st of December due date, 31 days of December, and you can only take 29 from November, so 1st of November used to be the deadline. So now the old act and the new act both stand amended, and very clearly they have said 1 month prior to the month in which the return is due. So now if it's 31st of March, 31st of January, no need to January, February, March, leap year hai, nahi hai, no need to calculate, no need to see 29, 28, also no need to see if December, if it's 1st or 31st of October, it's very clear 2 months prior. So 31st October or 31st January are the due dates. Also, one very important aspect that they have realized, and I think this is a good sign. Of course, the amounts have increased, but what the government did was brought in the concept of updated return. The idea was that we always had revised returns. I think for all the seniors, you will recollect we used to revise our returns. But updated return was when I used to notice some error, and instead of going for a rectification, 154, and all of that process, the government said you update the return, file, pay a fee, and when you pay the fee, you can update your return. Now, the updated return earlier were not allowed in the case of 148A notices, that is to say reassessment. What they have said is you can now even update those returns. The fees that have been prescribed is 20% 1 year, 30%, 40, 50. So those are the slabs based on how many years late you are updating the return. They've added and said 10% more is the, I shouldn't call it penalty, 10% more fee. So instead of 25 it becomes 35, 40 becomes 50, 50 becomes 60. You pay that and you can update your return. So even if there is reassessment going on, you can now update your return. Many a times people have received 148 and they know they have no good case because there may be a political donation which they know what has happened. There may be other real estate transactions which they know that they will have to cough up. So for those clients who come to you for those advice, or if you have relatives, I think an important change where the government is saying, you come, even if it's a reassessment notice issued, you can revise it, pay that additional 10% fee, and when you're paying the fee, there'll be no 270A or penalty or anything else that will be initiated, leave aside prosecution. So again, like I said, very important where the government is coming and saying that we want to trust the citizens. So expanded updated return scope even after reassessment notices, and they are now changing the act from it becoming penalty driven to fees driven, because for them too it's a good source of revenue, and for you paying a fee is slightly better than paying a penalty. Sounds better, though both of them are not deductible as an expense under 37, but yet I think important that you are paying a fee and the government is facilitating the revision. Gujarat se hu, market to something, I think even in the morning Ashish ji was asking कि कैपिटल मार्केट सर फॉलो करते हो, मैं बोला वो तो पैदा हुआ तब से सीखते हैं, सुबह उठते हैं मनी कंट्रोल खुलता है, प्रीवियस डे का पोर्टफोलियो देखते हैं, सुबह में क्या हो रहा है, गिफ्ट निफ्टी में क्या चल रहा है. सो दैट इज समथिंग दैट वी ऑल ऑफ कोर्स आर लर्न टू डू फ्रॉम childhood. But I think very important, and this is where I was saying that the act is now no longer only making changes from the perspective of increasing revenue. Sometimes revenue can also serve a purpose of dissuading people from something which as a country the government feels is not something that people, especially the youth, should get into. I think one such example is the STT. So 2-3 important changes with regards to capital markets, and I could see that capital markets is an important area since you had Siddharth Bhaiya and you've always had other speakers come and speak at your forums. So I'm sure all of you have some strong portfolios and are actively invested in the equity market. One important change is the share buyback. How many of you are aware 2 years ago there was a change in this scheme, correct? How many? Yeah, please can you tell me the change? So you're absolutely right, absolutely right. What happened was there was a change 2 years ago, seeing that companies were using the buyback route to pay the promoters and get money out of the company at a better rate. Because what happens in buyback, you are aware, you have a cost of acquisition depending on whether it's long term or short term. If you buy back the asset, you are paying a lower incidence of tax. So what the government did 2 years ago was very simply said that if there is a buyback, then in the case of buyback, it will be deemed to be a dividend and you are paying tax, as you rightly said, sir, as dividend. What happened is companies stopped doing buybacks because it was not being efficient and it was extremely ineffective even for the smaller shareholders, because they felt that why should I pay 30% tax when it should effectively be 12.5. Again 12.5 बोलने की बात है, surcharge करते तो 14.95 होता है, but any which ways a 14.95 is better than a 30. So what the government has now changed is that the share buyback regime has brought a small and subtle change to state that except the promoter quota, if there is a buyback, then those shareholders will now be taxed as capital gain. So you go back to what the situation was for all these years. But they have said promoters continue to be taxed as dividend. So now, depending on what is your category as an investor, if you are a small investor, if you are only a retail investor, then you pay capital gain. But promoter, and promoter very clearly they have said if it's a listed company, same definition as SEBI, LODR, how it defines promoter. And if you're an unlisted company, this company act definition, that is there I believe in 269, if I'm not mistaken, the promoter definition, the relative definition which is covered there, both continue to apply. And they have added another deemed provision saying if there is an investor who holds more than 10% of the shares, then he is deemed to be a promoter. So all the promoters that SEBI, if you look at, go to any website, go to BSE or NSE India, go to the company, you will see the promoter listing. For example, in the Reliance Industries, it will be the Ambani family, his trusts, his LLPs and entities, etc. So when Reliance does a buyback, those entities which are specifically categorized as promoters, and if there is any financial institution also which has more than 10%, then they get taxed as dividend, again at full rate. But for us, you and me who are retail investors, I'm assuming nobody in this room owns more than 10%. Sir, I hope 10% of Reliance, nobody in the room will have. Then you are all safe. We continue to pay tax under the capital gains regime. So, important change. Second is the STT. And you would all seen the market was going 200, 300 points up when Madam was speaking. And at 12:25, when she mentioned about increase in the STT rates. In futures, it was increased 0.05% to 0.2%. And in options, it was increased from 0.15% to 0.1 if it is a premium, and if the option is exercised, 0.125%. immediately the market tanked 700 points. And the reason for that, of course, was that now option strategies and futures is going to become that much more expensive, because you will continue to pay the same tax, but the rate of STT has changed substantially. And again, the logic that the Revenue Secretary gave subsequent to the budget announcement in the press was that the government is seeing that lot of speculation is happening in the F&O trade. There's a SEBI report available in the public domain which states that 92% of retail F&O players are actually incurring losses. So for the younger generation, it became a habit. क्या कर रहा है बेटा? बेटा market का काम करता है. सुबह 9:30 से 3 sitting in front of the ticker, exercising future and option trades, not gainfully and effectively employed, and many a times getting into huge losses. So now to discourage this, the STT rates have been changed. And one other small change that has been made in terms of the dividend income is that earlier, when we were putting it under IFOS, expenses, some people were claiming interest expense against dividend. Now very clearly it has been said that no interest deduction will be allowed against dividends from mutual fund income, and this is being made effective from 1st of April. The next slide is with regards to the corporate tax change, again with regards to MAT, the minimum alternate tax. This applies to the old regime. New regime mein nahi hai. Very clearly the government has laid out a path that people should shift to the newer regime, and in MAT too, the rate has been changed from 15% to 14%, and the MAT paid under the old regime will now be treated as the final tax, and rate has been reduced. This is giving a marginal relief to companies that continue to pay MAT under the older regime, though these companies are getting smaller and smaller because very few are actually able to exercise those deductions that were earlier available. Even the deductions under the SEZs, and all of those have now gradually been withdrawn, and the government now sees that the MAT reductions should be moving out. Very importantly, appeals, penalties, prosecution, I took you through some of this. Now, single order for assessment and penalty. Earlier, we used to have an order that was done for the quantum, and then separate order that used to be done for penalty. Now, single order will have both assessment and penalty. And again, for those who have been in litigation, a huge challenge used to be what we used to call high-pitch assessments back then, and even now it is referred to it as high-pitch assessments, where the assessing officer makes a very unreasonable addition to your assessment under 143.3. And what do you then do? You have to go for CIT appeal and then IT-18, and of course High Court, Supreme Court after that. But when you wanted to file an appeal with the CIT appeal, the requirement was 20% of the amount of the demand had to be deposited. That has now been brought down to 10%. Again, especially in high-pitch assessment cases, this is a huge cash flow relief to the assessees. And decriminalization has been brought in for minor or technical offenses. One other small but very important change that has happened is with regards to 15G, 15H. I'm sure many in the room, maybe for your parents or for yourself, will be filing this form with banks for no TDS or with other financial institutions. You have to separately go and file them. Now, what this new act is provided is that you simply file it with one custodian, for example, with the NSDL or CSDL, and it is their responsibility to take it to all market participants, and therefore bringing ease of doing business and, of course, changing the landscape in terms of how we work and have to get our income tax benefits derived. One very important change with TDS, TCS that has been brought in. Again, some of you may face this because you are all non-residents here. People from my state who are known for traveling, this was a huge challenge. If you are spending more than 5 lakhs in a year or beyond 10 lakhs in a year, you have to pay 5% TCS. And if it was beyond 10 lakhs, 20% of the amount had to be TCS. So if you took an international tour package and that amount exceeded 20 lakhs, you were expected to deposit 20% as TCS. Of course, it was done with the purpose of discouraging the forex flows that were happening. But now a rational decision has been taken. 2% flat rate has been brought in. So no need to see 10 lakh se kam hai, zyada hai. Flat rate of 2%. And for education and medical expenses also, so far the rate was 5%. That has now been reduced to 2%. So if you are spending money abroad for medical purposes from India, or you have education expenses of children who have gone out, now the TCS rate is 2%. Even other processes in terms of the TDS rates have been rationalized for Tendu leaves, etc., but I will not take you through them because may not be applicable. But again, one important change with TDS that has happened is Form 13, many of you would have filed, that is to claim lower rate of TDS or nil rate of TDS. So far it was always a manual process. You had to go to the jurisdictional AO and get that certificate for TDS through the TDS office. Now that process is proposed to be done online additionally, so you don't have to go and physically file for the lower rate of TDS or nil rate of TDS. You can claim the benefit online. Very important change, and probably one of the last ones that I take you through before I move for the last 5-7 minutes on NRI taxation and gift city, is on the transfer pricing arrangements. Very, very significant important change with relation to safe harbor. Entire ITES has now been merged as a single group. And what this does is that consolidates ITES, software development, contract R&D, that is research and development, all of it along with KPOs under a unified prescribed rate of 15.5% plus margin. So if imagine you have a company anywhere in India doing KPO work, doing ITES work, software related work, R&D work in IT, you had to earlier go for a APA, or even if you were doing a transfer pricing, you had to justify the rate that you were charging to your counterparty, let's say in Oman, in other parts of GCC or the world. Now, benchmarking was a challenge. The AO will always bring up the larger companies saying, look, TCS and others have much larger margin. How is it possible that you only have a 15% margin? And this used to lead to huge amount of litigation. Of course, benchmarking disputes, DRP proceedings which never got solved, matters used to go to ITAT, high courts. What this has been proposed is that if you are an IT company, below that 2,000 crore threshold in terms of turnover, it used to be only 300 crores. So large chunk of companies in the IT space get covered. If you offer cost plus 15.5%, simply finished. You are a safe harbor, no further question asked, no need for an APA, no need for DRT, DRP, transfer pricing, everything done away with. So your interaction with the TPO and the transfer pricing officer, again 60 days prior to the date of assessment, it used to be going to the TPO, TTO had to do the order, and then it would come back to the AO for the final assessment. All this is going to go away. And therefore I think many in the room or many in the country are not realizing the impact of this, but I can clearly see a large area of transfer pricing practice that used to happen only because all of these cost components had to be computed, APAs used to be negotiated and got approved. All of that will see a huge change because now safe harbor, government itself is saying 15% cost पे margin है, आप IT, ITS, software, R&D, KPO services दे रहे हो, I am happy, offer 15.5, pay tax on that, up to 2,000 crore your turnover, no questions asked. So very important change. That is also going to improve the APA process. Now, I think as I quickly go forward, some important changes to make India a global platform. Data centers, huge announcement has been made. We are all chartered accountants, we've heard budgets. Reductions used to come for 5 years, 10 years at max. And then when sunset clauses came, extension was 1-1 saal ke liye. We've all seen ATIA, IB, hundreds of provisions that we would have seen over a lifetime. Now they are saying 2047. Clarity has been given till 2047, especially for data centers that are coming here from foreign companies. You have a tax holiday till 2047. Huge clarity in terms of tax. Similarly, I think some important changes, I'm sorry the slide probably is not opening up fully here as it is opening for me, maybe because of the presentation. So some of it is getting cut, but I'll probably send you the revised version. Safe harbor for bonded warehouse and data centers is a huge opportunity. You're already seeing Visakhapatnam, Andhra and other parts of the country where huge data centers are being set up. They are now going to be given an exemption up to 2047. So again, a huge change in terms of the clarity that is being provided of the tax holiday that they will enjoy. NRI property transactions, for those of you who, and I hope you have many properties in India, but if you do end up selling them and you are a non-resident, it was always a challenge because the buyer had to get a TAN for withholding TDS. Now that TAN has been done away with and very clearly what has been said is a PAN-based registration will be done. Of course, 15 CSCB continues to apply, but no need to apply for a TAN when you are buying property from a non-resident. Again, a move done to help non-residents who want to sell real estate assets in India can be done easily. Finally, for the NRI front, some important changes that have been brought in. I put the gold coin there because sovereign gold bonds. And I see many people from Kerala, and I've always seen their investment largely is either real estate or gold. Some of them have moved to SGBs also. What was a challenge and in a way not clear under the Income Tax Act was what happens to sovereign gold bonds which are purchased from the markets, so not issued by RBI, secondary market purchase, or for those who were either bought secondary or issued by RBI but sold before the maturity date. What is the taxation? Now very clear, the exemption applies only if you hold to maturity, HTM. So if you have a 2029 series, 2031 series, you will have to hold those SGBs till the time the maturity comes. At that time if you redeem, you have zero income tax, or else you are liable to capital gain. Two also important changes which have been done with regards to the Black Money Act. Many people are facing these issues. They have moved back to India. They have ESOPs from a foreign company. Those ESOPs are in fact shares which are not held in India, held abroad, because the custodian may be different, the broker account may be different, and the asset is actually a foreign asset. And those foreign assets were not disclosed. This entailed penalty and prosecution. Many people started receiving these notices. So what has now been proposed in the Black Money Act is, if that amount is up to 20 lakhs, there will be no prosecution, and by paying a fee, this will be notified, you can now go ahead and disclose these foreign assets. So especially for the smaller taxpayers who had foreign assets but due to oversight did not disclose this, now it becomes easier. Finally, I think in the last 5 minutes that I have, I'll take you through the last point that was on my slide, which is IFSC and Gift City. Again, I did not hear it in the budget speech. I'm happy, Ashwini ji, I just met you and you told me you are now working in the Gift City. I don't know how many of you are actively working there. I've also started an office there, and I was looking at what are the changes, because every year, last 7-8 years, there are some changes that are brought in with regards to the IFSC. How many in the room are aware of Gift City and IFSC? Very few. It's a international financial service center. When I was coming into the city of Muscat from the airport, I was showed a convention center on the right, and I was told that that is going to be converted or proposed to be converted into international financial center here also. So important for you to understand what an IFSC is. I think those who are in Dubai, you know what DIFC is, so no need to explain to them. But for others, in a simple language, it is nothing but a offshore onshore center. All the laws that are there in offshore IFCs, it may be Singapore, it may be Mauritius, or it may be Dubai, all of that is done onshore in India in GIFT within the IFSC Act, was referred to as the IFSC zone. So if you look at GIFT, GIFT is a very well-planned city. As a city would have, it has residential zone, hospitals, hotels, other offices in the domestic area. But there is also a specified special economic zone, which is the IFSC zone. And IFSC zone is, like I said, a international financial service zone. Like you have DIFC, like you have Singapore. The idea of the Honorable Prime Minister was, whenever he went to Singapore or Dubai, he would see that, wow, financial services, large buildings, but अंदर जाके 70% तो इंडिया नहीं मिलते थे. तो उनको पूछा, भाई यहाँ से क्यों ये काम कर रहे हो? Why don't you do it from India? Say, no, India, RBI, SEBI, IRDA, PFRDA, who will go, Baba? This is easy, single regulator. So what was done in 2019? A new act, IFSCA Act, is created. And maybe, Chairman, you can think of a special session on GIFT, because I think there's a huge opportunity there. A new act is created. 17 different regulators who hold the regulatory command in India have been told your power is now vested with IFSCA. So no longer you need to go to IRDA for insurance, no longer you need to go to RBI for banking, no longer you need to go to SEBI for capital markets, no longer PFRDA, and a whole plethora of other regulators. Single regulator, single clearance. And world-class benchmark regulations. So if you set up a fund, you have fund regulations, set up a fund under fund regulations. I've been as a part of various delegations along with the regulator to Australia and other parts of the world, where I've had the privilege to accompany Chairman IFSCA and other senior officers of the government, where we've gone, had interactions, spoke about the IFSC. And log bolte the yaar, kya exemption hai? And the exemption was 10 years out of 15 years. Income was totally exempt. So imagine you set up a fund in GIFT. Imagine you set up an insurance business. Imagine you are doing aircraft leasing, ship leasing from there. 10 years out of 15 years was exempt. Generally first 5 years difficult to make profit. So idea is people will say 6th to 15th year, all my profit is exempt. So many companies came in, more than 1300 companies are now registered in GIFT. But still people had doubts. So government has made this huge change where they have said 10-15 bhul jao, 20-25. Out of 25 years, 20 years of profit is totally exempt from tax in IFSC. Therefore, India has opened its arms and its doors and windows to the world in the financial service space. If you are a fund, if you are in leasing, if you are in insurance, reinsurance, if you are a bank, you set up an IBU there. Today, QNB, Qatar National Bank, for example, has one of its largest offices there. Many of the other global banks are, and I'm sure, sir, with this new trade agreement, banks in Muscat will also set up shop there. Today, QNB, for example, is giving 2% interest on current account balances. So I know of companies sitting in Dubai who no longer have a bank account in Dubai, but their bank account is residing in GIFT. So many non-residents who have moved their bank account to GIFT because you continue to maintain a foreign exchange account. The beauty in GIFT is the only account which is not opened is INR. You can open 15 different currencies starting USD, GBP, Dirham, etc., etc. So the idea is you have free portability of funds in terms of how do you transfer money, send in money, pull it back, no 15 CSCB. It's as good as an offshore account. And therefore, giving this kind of clarity, I am very confident for those of you in the fund space that in the future, it may be Cat 2 or Cat 3 funds, it may be real estate, equity, mutual fund investments going into India. If people are looking to invest in India, no longer will you be doing Mauritius or other routes. And now with the recent order that the Supreme Court has given, I will not like to name the company, but very clearly laid out the fact that if you don't have substance in Mauritius, we are not going to allow you to take the benefit of the DTAA. Many funds will start establishing themselves through GIFT, and that will be the entry route to India. Similarly, for residents of India who want to access the global markets, today global funds have opened up shop in GIFT where you can invest in America, in Far East, in China and other emerging markets. So, very important. And more important that, what happens after 25 years? People think it's Gujarat, it's something initiative of the Prime Minister. So what if after he is not the Prime Minister, what will happen? That clarity is also given. After this period, 15% is the tax rate. Why 15%? I think you all know because that is what you pay here as corporate tax, as I'm told. And this is of course the pillar 2 reform that OECD has done and said this should be the bare minimus or de minimis for taxation. So after that also 15% tax. So you're equally well off as you would be in Oman, Muscat as you are in GIFT. Very important change. And finally, I think treasury centers also some very important changes have been brought in. So I think as I conclude my last slide, which is here, and I believe I'm running out of time, so I just have a couple of minutes. I think yes, many changes. 1st of April 2026 is when the new act will become live. Some of these operational changes, especially the TDS and forms, may take up to 1st of October. For companies, important that you look at the MAT credit. If you have past MAT credit, how do you utilize it? Period has been extended, but they will have to start strategizing on it. Buyback policy, again, which promoters will be willing to say that मैं buyback करता हूँ, I will pay a higher tax, but let the poor investor pay lower tax. I have my doubts. इतने दयावान promoters India में हैं या नहीं है, but at least अगर हैं, so now they don't have a reason to say that it is not tax efficient, and therefore I would not want to do it, but a good change. Transfer pricing, safe harbor, will change the world for ITS software companies. I think for investments, of course, dividend structures have to be relooked at. STT and dividend structures are referred to also the IFSC and the treasury centers. The STT cost and the foreign assets disclosure that one ought to do. And for compliance, I think now we have a larger window, a larger time for us to update our returns. So with this, I hope in the time that was allotted to me, I could probably at a 30,000 or probably to 15,000 feet level take you through some of these direct tax proposals and also give you an overview of the larger budget picture. I once again thank the chapter for giving me this opportunity, and I wish all of you, as always, all the very best. And as I always conclude, I request and urge each one of you, because wherever I go, people will say ICAI doesn't do this, ICAI doesn't do that, and I always ask the other person, who is this ICAI? I believe, and I request all of you to believe, that I am the I in ICAI. शुरुआत भी आपसे, अंत भी आपसे, इंस्टीट्यूट भी आप, इंडिया भी आप. Thank you very much. Jai Hind.
If anybody has any questions, probably we can just take one or two as we are running out of time. Okay, then we can take it offline. So thank you, sir, for the insightful knowledge sharing session. As chartered accountants, we are always keen at looking at numbers. And thank you, sir, for bringing out that perspective of how the numbers reflect the nation's vision. Now it is that point of time when we want to extend a warm welcome to His Excellency Srinivas, sir, for being present with us this evening, and that reflects the continued support sir extends to the chapter. May I request CA Jay Duseja, Membership Committee Lead, to kindly escort sir, I know sir has already come here, and extend a warm welcome with the GIY kit as we hear about sir in the background.
Aniket, I think a great round of applause is due to you for a masterly presentation. Such great insights I never had in any of the budgetary proposals of India. For the first time I understood so much of detail to be learnt from the budget. And I was asking myself the question that what could possibly be discussed in respect of budget in Oman. But obviously you made a stunning presentation. Everybody was engrossed, impressed, particularly I am. So congratulations to you. Your message to the anchor here that you never wanted that you be presented to the entire audience. I am glad that they presented you, because people like me would not have been able to make sense. So don't blame it only onto the others that you better know me before I get introduced. So it did help us tremendously on that count. As you were presenting the intricacies and details of the budget, a couple of thoughts came to my mind. It would not be liked by the CA lot here, obviously, because what I'm saying you may hate. But I am not from the CA group, and therefore I really get this wonder in my mind. Why do we need such a complicated thing for simply paying tax? I earn money, I spend in a particular fashion. Where is the secret? Everything should be categorized in some fashion as to where I got the money. मेरे से आ रहा है क्या बिजली पूरी जो इको आ रहा पता नहीं कहाँ से आ रहा, ठीक है? So with the advent of AI, particularly it appears that everything that has been said can be put like a formula and it can be interpreted. Elon Musk apparently told that soon we would not be needing any doctors because robots will be doing the entire job. That certainly may not be true for the medical profession, but a lot of the work which you spoke of, which is necessity of today, must be possible to be done with the help of AI. Particularly not an AI which makes a guess, but an AI which actually devours the data, particularly of income tax or the budgetary now, or Income Tax Act 1961 versus the 2025, and then the very meticulous numberings which you remember, all outstanding quality. But if I were to translate that to my profession, I will really get already tired that if I have to do that kind of job. So not everybody is so blessed as you are. Number one of the entire formation, as you have had the formation within your family of looking at the entire people. And the second thing more than that would be also, CS may be all blessed perhaps. They know the articles, the numbers, and then the formation. I'm talking like an ordinary citizen of India, that maybe there is a necessity for a budget or an income tax act to be as complicated as you explained it to be. कहाँ हो गया? तो बैठ जाना. कौन सा फत आ गया अभी? बैठा. तो ये बोलो ना साफ साफ आके मेरे को जोर से बोलो बोल के. अच्छा, sorry, he was being nice to me. Thank you. अब ठीक है? हाँ, चलो. Thank you very much. It appears as if the microphone is getting into my mouth here, but be as it may, okay, I'll make do with that. So the point I was making was maybe with the advent of AI, a lot can be demystified in respect of all these things which were spoken of. And that is what reassures me, that even though I don't have all the gifts that Mr. Aniket, or for that matter the entire CA community has here, I need not feel too depressed. Many people do not fill the tax returns. Even if when they fill tax returns, why should they be made to fill first the tax returns, then be challenged that you did not fill properly and therefore be penalized? I mean, this is double whammy of the outstanding order. The very fact we ask somebody to fill up the data itself means that कुछ तो किया काम उसने. वो पर penalty मार रहे. चलिए. I think a lot of reform, Honorable Prime Minister is undertaking all series of reforms. Maybe one good day will come to that also, that you don't have to bother so long as you do the expenditure through formal channels, so long as you earn everything that you earn through the formal channels. The entire taxation should be a burden of the system. And that's all. You only either cry or you enjoy. So that is one point. And I noted plenty of points, so many things he said, and therefore I have to quickly go here. Viksit Consulting had come here a number of months ago. I am just mentioning it to you. I do not know how many of you are aware, but Viksit Consulting, under the vision of Honorable Prime Minister, the desire was that India should also be having consulting firm. मेरे को वापस एक बार आप ठीक लग, आप लोग ठीक लग रहा है? आप लोग ठीक लग रहा है? ठीक है. Okay. So under the vision of Honorable Prime Minister, a group of CEs came together, Viksit Consulting being one of them. There are three others apparently, or maybe four. All of them had the ambition that why should we be nowhere in the entire zone of international consulting firm zone, so let it be top 4 or top 5, something like that. But apparently it fizzled out later. At least as per the reckoning of Viksit Consulting, the energy and enthusiasm that they showed was no longer there. A couple of months that I spoke to. Why is that it has happened? One of the things again was that no, but I was really amazed that Sangeet, he was offering कि भाई मैं पूछूंगा बाद में भी बताऊंगा, time को shortage नहीं, but nobody has any question, but I hope you have all questions of him. So consulting firm का क्या हालत हो गया है? That will be something, because I was very impressed that if we can have the ambition of such a consulting firm being created in India, if not alone, but as a group, as a consortium with geographical diversity within the country. I think 8-10 regions that they represented. I don't know what is the story happening there. उसका अभी तो नहीं बता पाएंगे, बाद में बताइएगा. ठीक. I also understood that the great reform which you had brought in through UDIN/DIN has been dumped. So I am again wondering as to why it has been dumped. It should have been actually upheld. So you shared a number of concrete growth stories in the country, outstanding I must say. For example, people like us sitting here and perhaps not traveling as widely as you do within the country too. So when we hear that there are international investments in semiconductor stories unfolding in Gujarat, that really brings us and makes us very, very happy and proud. That the country is not only all talk and no concrete work, but actually a lot of talk and also work as we go along. I was just trying. No. No. So I think it does not have a USP. Anybody can enjoy this in the setting. Thank you. The very learned group that is represented across the table here, I would invite them to also give equal focus to SEPA. If you are able to demystify the budget as Aniket did, and most of you must also have done. It would be like a piece of cake for you to demystify this SEPA poor fella. Not many chapters, a few of them. So please do that. I don't know how many of you, as a part of your profession, will be even looking at benefiting from the comprehensive economic partnership agreement which India and Oman signed, ratified by Oman, pending by India, perhaps in next 10 days, to kick into force, latest by sometimes late April or May, but our ambition being 1st of April onwards, so that we nicely and cutely align with the new financial year. But whether that happens or not depends upon that little clause within the SEPA which says within 2 months of the later ratification of the two. So that pushes us to the month of May. But having said so, the roadshow on the lines of what we did for the budget will be much more relevant in respect of SEPA 2. If it just may ask you, how many of you will be naturally keen to be demystifying SEPA to the team India and team Oman? नहीं important तो है आपके Okay, thank you. So that essentially means it's a bread and butter for many of you, if not for all of you. So that will be good. That helps me also, because otherwise the SEPA reading is like again huge technical jargon for me. So maybe you will do the hard work of understanding, and then in the process we would be doing it online, because I need to cover Team India, Team Oman across geography here. So at least embassy will be organizing. So those who wish to please participate with us, do come forward. What we will do that we'll ask both Oman and India to bring all the stakeholders on that particular chapter. You'll have to obviously give a 1 or 2 pager of teaser saying what lovely things that chapter contains, so that entice people to come and listen in. But as you do that, when you present, obviously, perhaps as Aniket did for the budget, I hope that we'll be doing the same style, justice to those chapter by chapter. Not only going individually on India, Oman, but also to gel it with India, USA, India, Singapore, sorry, Oman, USA, Oman, Singapore, Oman, GCC, Oman, Middle East, Oman, Arab, I don't know, so many which Oman has signed. So how does that really benefit Team India and Team Oman to go beyond? Aniket has anyway pointed out to everyone that you need to look at Gift City with that kind of respect, particularly the back of SEPA. So chapter by chapter we will do that. So please do come forward. We'll draw a calendar and try to invite everyone and move forward. अगर नहीं बोलते हैं गुडले को आता कोई नहीं वहाँ पर, लेकिन जोर शोर से बोल दिया, बहुत है, धन्यवाद आपका. नहीं 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 ऐसा नहीं, वो ना बोला उतना ही बहुत नहीं, जितने बार जमघट में मेरा इसका नाम है, जैसे ना एक पर चलता है ना, हमारा आयोन चलता है, आयोन ना छोटा सा ION, इंडिया ओमान नेटवर्क. एसेंशियली वी ऐड इंडिया ओमान सेपा नेटवर्क बनाएंगे हम, फॉर एग्जांपल. सो चैप्टर बाय चैप्टर विल डिमिस्टिफाई दैट थिंग. Essentially hybrid, essentially online and offline, on-site. And second thing is the track 1.5, because we do not believe in only two governments sitting very seriously and talking and doing nothing, because the things have to be done by the private sector. So with that in mind, today only I was in the Foreign Office, I suggested, they welcomed, they said that yes, we need to follow up on Honorable Prime Minister's visit last December, and don't even limit to that entire larger thing, but also focus on the SEPA. So there is traction. Davis is sitting here, and he's already stealing the thunder from the Indian team, because he's already launching multiple such road shows back in India. That's exactly groundwork. But what I'm saying is that we need to supplement everything that is done, whether in India or here, through these hybrid network interactions which we will be organizing. So this India-Oman network hybrid track 1.5 is also in the nature of a group discussion. The distinction being that I generally prefer that anything that you have to say, first in the nature of a teaser to float the entire session. But second thing is to also, whatever you have to say, the entire thing, the PowerPoint also gets relayed beforehand to everyone. And everybody is supposed to be reading and digesting and coming with a questioning mind. Therefore, these sessions then are more into the nature of discussion or clarifications. Otherwise, people come and then 1 hour you lecture and then they say कि सुना नहीं, question नहीं पूछते, फिर समझ में नहीं आता वहाँ पे. So I have seen that thing happening. And everybody, the SEPA has the usual chapters, whether goods, trade in goods, services, rules of origin, SPS, that sanitary, phytosanitary related, harmonizing standards, customs procedures, trade remedies. Small and medium enterprises, a fascinating word for both Oman and for India, because that is where the most of the employment comes, not from the big ticket investment. And not to forget about this protecting innovation, intellectual property rights. These are the usual chapters, so we understand that they will all be relevant, but the devil will be in this SEPA in the details as to how is the terrain presently presented to Team India and Oman, and how that will be improved with the SEPA getting into force. All in all, I must say that this is the first session which I am attending, which is the most substantive and serious, or perhaps I am staying till the substantive part began. The very fact that your chapter has been winning accolades after year, right across the series, staying in the top 3. As they say, reaching top is easy, but staying there is very, very difficult. So you are all investing your energies. Itself indicates that there is a very high quality talent, dedicated, committed, available in Oman. India-Oman story therefore is in the good hands. And through you, I would also want to benefit. And let's take the vision of Honorable Prime Minister, drop by drop, taking the country to the developed nation status by 2047 on the back of Indian Oman. Thank you very much.
Thank you, sir, for sharing your inspiring thoughts. And we would like to, we would be pleased as a chapter to collaborate with Indian Embassy with regard to SEPA sessions, as well as advised by Aniket ji, we would do a session on Gift City as well. Now, it is that moment of the evening when we would like to extend our heartfelt gratitude and appreciation to both Aniket ji as well as His Excellency Srinivas sir. May I request CA Unmesh Bhumi to kindly escort Aniket ji as well as Srinivas sir onto the dais. But before we start with the felicitation, it is my pleasure to invite a young achiever to the stage for felicitation. She is newly qualified Chartered Accountant in November 2025. What is the distinguished fact is that she is one of those CA students who has completed articleship here in Oman under the guidance of CA Ramanand Prabhu. Currently, she is working as a SAP consultant at Accenture. Please join me in welcoming Shruti Vinita ji to kindly extend the felicitation to CA Vinita. Shruti Vinita. A big round of applause.
So, good evening everyone, and thanks a lot for giving me this opportunity to receive this award from our renowned past President Aniket sir and our ambassador. I'm really proud because it's one of the best moments after becoming a chartered accountant and receiving this felicitation award here. For this, I'm really thankful to Ramanand Prabhu sir, because I had no idea about doing articleship here in Oman. So I just reached out to him and he was like, okay, you just come. And I was like, oh my God, he just asked me to come, and without any interview, I was a little afraid, to be honest. But then the process was a little tedious, but I request our chairperson to make it possible so that it would be an encouragement for everyone who wishes to pursue it abroad, and then it also extends them another opportunity, so that I do see people who want to work in abroad, but they lack this particular experience of not working those places. Even GCC, they require CAs to have experience in Oman or any other GCC country. But if they get an opportunity to do their articleship there, that will be the first, they will get the first preference. In spite of completing my articleship here, I wanted to go back in India because I wanted to try something new. So I had a chance to get into Accenture, and now I am working as an SAP consultant, and I'm happy that I came here and I was able to attend this. So thanks a lot.
Thank you. Best wishes to you, Shruti.
Thank you.
Their certificates were signed by CA Aniket Talati ji. A candle loses nothing by lighting another candle. Tonight, CA Aniket Talati ji has lit so many this evening. So this requires him to be appreciated, and we would extend our heartfelt gratitude by the token of appreciation. May I request His Excellency Srinivas Sir to kindly extend the felicitation to CA Aniket Talati ji. Now it's the time to extend our appreciation to His Excellency Srinivas Sir. May I request CA Unmesh Bhome to kindly felicitate Srinivas Sir for being with us this evening. Thank you. Thank you, sirs, for being with us this evening. And we request all of you to kindly be seated, as we will have group photos with all the members, with the guests today. But before that, I would request CA Badri Subudhi, Secretary of ICAI Muscat Oman chapter, to kindly deliver the vote of thanks.
Thank you, Sangeeta ji. Good evening, distinguished guests, dear members, and my professional colleagues. On behalf of ICAI Muscat chapter, my sincere gratitude to all those who have contributed for today's event success, Indian Union budget, and the celebration of ICAI Best Chapter Award. We convey our respectful appreciation to His Excellency G.V. Srinivas Sir, Ambassador of India to Oman, for gracing this occasion and saying the great words and some comments about the institute, the way some of the tax, someone non-finance saying about and recommending what should be the simplicity. Definitely that's the word I think our President Sir will take up, being the advisor to the government of Oman, government of India before the tax budget is rolled out. So INSUD contributes a lot before the budget is rolled out. So sir, the words from Ambassador is for you. We are deeply honored by the presence of our eminent speaker, CA Aniket Talati ji, past President of ICAI. Sir, your comprehensive analysis of Union budget, India's Union budget, definitely enlighten us, especially the crowd who are here, and especially to our ambassador. He has thanked you, and nothing more can be said about the session today. There is a saying, the finance minister presents the budget, and we the professional throughout the year keep interpreting the budget and advising your client. So the finance minister's job is for one day, one session in the parliament. Our job is for 364 days for advising our client. We extend our sincere thanks to the Dean and top management of College of Banking and Financial Studies for their support and guidance on facilitating the chapter to function under their sponsorship. And we will keep continuing this with CBFS for the best and chapters activities. One more note, a good budget is like good accounting. It tells a story, but never reveals all the suspense on the same day. I wish to acknowledge the chairman, past leaders, past chairperson of the chapters, members, management committee for their dedicated effort to bring out such magnitude of CPE events for the benefit of the members. A big round of applause for our managing committee and the subcommittee members. This reflects everything. With this note, I thank each one of you for being here, and also after the photograph, invite you for the dinner hosted by your chapter. Thank you.
Thank you, Badriji, for formally concluding today's evening. Now, we will just have a few of the photo sessions. So for that, may I request His Excellency Srinivas Sir and Aniket Talati ji to kindly come up, along with the managing committee members of ICAI Muscat Oman chapter.